Morning, everybody. Happy Tuesday. All right, let's get started. A bit on a tighter leash today. Hopefully you guys can all hear me, so we're going to get started here in just a second. You guys hear me okay? Okay. All right. Perfect. Okay, let's get started. Again, good morning, everybody. This is our Set the Market morning call here for Tuesday, July the 22nd. We are going to go through our top things on the radar. Silver, by the way, up another half a point right now. 50 basis points. We'll look at it in a second. As you guys know, I remain bullish of silver, so we'll look at that in just a minute. If you're here for the first time, please make sure that you subscribe to the channel, give us a thumbs up, like as always every day on these videos, so that we can continue to do this. So what are we going to do? We're going to look at our top few things. I want to first talk about what's going on in the yield market just really quickly. Then we've got a whole bunch of curious bearish reversals that took place yesterday, kind of across the market, that I thought were rather interesting. And I will once again just reiterate that silver remains bullish. Now, I will always in the same sentence say that silver is also volatile, so keep that in mind. But let's get started here and get through it. First things first, we'll look at the bond market quickly and then the equity market. Here's the 2-year yield. The 2-year yield this morning is down about 54 basis points. About 2 basis points, but 0.54% in, anyway, 2 basis points. Let's keep it simple. Don't want to freak people out. I still think that it's possible that we see 2-year yields go back, towards 2.5%. I have yet to put on a trade to go basically long bond, long the 2-year futures, the 2-year note. But at some point, I still think I will. I tried it once, and then I got out I think we got up for a marginal gain or a marginal loss. It wasn't anything memorable, about a month and a half ago, maybe something like that. But I still think it's likely that ultimately 2-year yields are going to go lower. Again, sort of 3.5% is the first stop. And then, I still think we could see, 2.5% yield on the 2-year, right, at some point. But again, the economy has to be picking up its sort of slowdown, and which it's not really doing that, at least not sort of in sort of top, sort of top headline kind of perspective. The equity market, of course, everyone cares about the equity market. I will continue to reiterate that it's getting very steep. We have been highlighting the rising wedge patterns, which I think are continuing to play out. This is the S&P 500 SPY ETF. That is not a call for a market crash on my part. That's simply pointing out that we have a rising wedge pattern. And ultimately, you will probably see some mean reversion, whether it's 5 or 10%, I don't know. But that kind of is the safe assumption at some point to make that we'll see that. If you zoom in a bit closer into yesterday's price action, which is really what I want to get to, and I'm going to move a bit quicker today, keep it to maybe 10 minutes this morning to make sure that we can move through this. I posted something in the members chat room this morning that I'm not sure if anyone read it, or if you're a Trade Ops member, go ahead and read what I wrote. But I said that basically yesterday, a lot of people were chasing intraday call options. And on the daily chart, if you look at the SPY, we had what's called a bearish reversal day. Basically, what happened is, if you were to look at intraday, which I'll show you here in just a second, from an intraday perspective, well, I can show it to you here, and we'll look at the SPY because it shows it a bit more clearly, we had a very clear bearish reversal. So this here is yesterday's price action here. We had a move higher in the morning on a Monday morning after options expiration. That's quite frankly par for the course. I was very weary of that. So I didn't add any longs. I'm actually overhedged right now. I'm actually net short stocks right now, which basically means I'm long stocks in a basket, and I'm more short than long on a hedged basis. So if stocks go down, I'm actually going to make money. In fact, I have what's called an asymmetrical risk setup. So if stocks were to correct, 4 or 5%, I stand to make a hell of a lot of money, despite being still allocated to the long side. Here's what happened yesterday afternoon, which blew up a lot of retail traders' intraday chart chasing behavior. And that just shows that it doesn't take a whole lot for markets to for people to kind of blow up their accounts. So if you go again, for those of you folks that are TradeOp members, you can go into our members area, and I'll quickly show you to here. Here, this is what I wrote this morning. That something about 70% of SPY call volume yesterday was by retail investors, led to about almost $1 billion in intraday losses. So that's not fun, and unfortunately, a lot of people are going to get caught with that kind of behavior for years to come. So I'm hoping we're able to teach you a better way here than to chase. So what's interesting, and this is kind of what I wanted to get to. That sell-off yesterday was kind of widespread in the sense it was across different stocks. So you look at something like OKLO, which we actually have in full disclosure, and we're closing it this morning. We actually have as a bucket 2 swing trading long, but yesterday's stock reversed 9.4% off the highs, right? So that's the daily action. This is sorry, let me quickly move this back up so I can have a smart conversation with you guys. This is a clean energy stock. So it's basically power plants and power plant power, that kind of stuff. Then you look at something like URI, which is United Rentals. They do equipment rental, and you'll see that stock yesterday was down almost 3.75% on a big reversal. Now, equipment rental and power plant stocks don't have a whole lot in common. And if you think that's still too close, what about burritos? Chipotle Mexican Grill yesterday also reversed gnarly in the afternoon, down 2.75%. What about ETFs? Sure. What about ARKQ? Not big, but notable outside bearish reversal day yesterday. So when I read this kind of stuff, and when I got on the horn with a couple of my buddies that run funds, and ourselves, of course, having the insight ourselves, I just have to be concerned, because it doesn't mean it's the end of the world by no means, but it means that someone was basically getting rid of positions kind of across the board, and these were pretty crowded trades to begin with. So again, that's not meant to be alarmist or bearish. It's just to keep in mind that stocks don't always go up. In fact, when they go down much quicker. So that's what I saw yesterday. So again, those ticker symbols were OKLO, URI, CMG, ARKQ, and even EQT, which this one also is in that energy space, actually natural gas space. EQT Corp. That one was down almost 10% yesterday. So a lot of these stocks set up for like bear call options credit spreads for those people that are privy to those kind of things. Again, keep in mind we are in earnings season. So, before you put on a trade like that, make sure there's no earnings coming up right away. And we are actually seeing earnings for United Rentals coming up. I'm just getting an alert on copper. For those people that are long copper and silver along with us, you would be happy to know that copper just now is making another nice move here today. Here is what that looks like, up another 1.4% today on the daily chart, along with silver. Silver this morning is up another, now almost 1% since we've been talking. It's up like another 40 basis points. So, you know, that trade in silver continues to work really, really well. I'm going to show you guys the chart on that here. Now, obviously, these are the futures markets because the cash markets aren't open for these instruments in terms of the ETFs. But we continue to really like copper, silver, all those things on the long side, again, hard assets. And that's really also a multi-year story. Now, trust me, there's going to be plenty of volatility on the downside as well at some point, but that's what we're seeing there. Two more stocks I'm going to quickly point out to you guys. One of them is FedEx. The other one is UPS. Of course, closely related companies. They deliver stuff, you know, packages, whatever. If you go out the front door, you probably will have a package from one of those two any given day. I just looked at it through a lens of technical analysis here. I think it's interesting. These companies are or at least FedEx. We'll look at UPS in just a second. You can see kind of the bear flag pattern. And so if this pattern were to play out, then FedEx would have to go lower. Now, earnings for FedEx were just in June, so they don't have earnings until September. UPS, again, these are closely related stocks. They have earnings coming up in next week on Tuesday, and they have the same pattern, which is a bear flag pattern. Again, I don't do trades through earnings, but if anyone were to say, you know what, maybe the economy at the margin will weaken at some point, and again, I don't have a trade on this, but I am looking at this as a potential consideration, then UPS and FedEx would be ones that would be interesting on the downside. They've been exhibiting, by the way, UPS, if you're wondering if this pattern has worked at all for UPS, well, you don't have to go back very far, and you can draw these lines all over the place. That's why UPS remains in a bearish trend on our market rover, right? We've got these bear flags all over the place. I mean, I'm going to spend 10 minutes here drawing all these bear flags. They're everywhere. And I would expect that this one here is going to work as well. So just something to keep in mind. So that's what I had. Again, OKLO, URI, CMG, ARCQ, all giving us bearish reversals yesterday. The S&P 500 itself giving us a bearish reversal. And, of course, that's now with earnings season kicking off in earnest here this morning. We remain silver, long silver and copper, hard assets basically. And that's what I want to go through. If you guys are joining us in our Inner Circle Market Rover member session, we'll start that in about 5 minutes. I'll be over in Trade Ops for a bit this morning, but we've got Boot Camp Day 2 starting at 11 o'clock Eastern Time, where we're going to go through how to trade extreme oversold and extreme overbought markets. That's going to be an awesome session. I'm looking forward to it. Please make sure you give us a like. Yes, thank you, Doug. I appreciate it. Please make sure you give us a like at the bottom of the YouTube window there so that we can continue to do the show. Subscribe to the channel. Very important. Spread the word if you like what we're doing here. So I've just given you probably about 4 or 5 trade ideas here in a matter of just not even 15 minutes. And again, if you're in the boot camp, we'll see you guys in about an hour and 45 minutes. And if you are an Inner Circle member, we'll see you in about 5 minutes in that session. See you guys there, and have a great trading day.